Welcome to the Stock Market Daily News podcast for Friday, November 8th, 2025. Let's jump into the market action from yesterday, where the S&P 500 dropped nearly 1%, the Dow Jones fell by around 0.5%, and the Nasdaq took the heaviest hit, down almost 2%. It was a volatile session dominated by tech weakness and investor jitters, especially around big names and high-flying sectors. Today, we'll break down what's moving the market, which stocks slid the most, and why retail investors are showing early signs of fatigue after months of tech euphoria. Let's get started with tech stocks, because that's where the fireworks were. First up, after months of blockbuster gains, some of the hottest tech names flashed serious warning signs. Intel, Oracle, and Advanced Micro Devices, all up more than 20% in a single day earlier this year, suffered sharp setbacks. Intel, riding high since a government equity stake and big Nvidia investment, saw its momentum stall as technicals turned negative. Oracle, down 30% from recent highs, is now a sell the rallies name for many traders with its cloud story losing steam. And AMD, despite recent partnership news, slid as profit-taking and expectations grew sky-high. The takeaway? Even tech's biggest winners aren't immune when sentiment turns, so investors should keep a close eye on support levels and volatility. Next, let's talk about the retail investing crowd, whose buying power has shaped much of 2025. According to JP Morgan, retail traders just had their biggest tech buying spree in 4 months, scooping up $8.1 billion in mega-cap stocks, mostly in the Magnificent Seven. Meta platforms, in particular, saw record buy-the-dip inflows following last week's earnings dip. But when markets turned lower, these same investors became net sellers, highlighting how quickly sentiment can reverse. If you're trading momentum, it pays to be nimble. A quick look at Bitcoin now, which continues to send warning signals for risk assets broadly. Bitcoin dipped below a key technical support at $102,000, triggering the most bearish on-chain signals since 2022, according to CryptoQuant. The loss of this level now puts downside targets as low as 91,000 or even 72,000 in play if a rebound doesn't materialize quickly. While Glassnode calls it a mid-cycle correction rather than full-on capitulation, falling liquidity and cooling AI enthusiasm are hurting both crypto and tech stocks. Bottom line, crypto moves are increasingly relevant for equity traders tracking broader risk sentiment. Turning to sector highlights, gold attracted fresh interest, climbing to nearly $4,000 an ounce as investors sought safety on a tough day for stocks. The AI-driven rally that shielded equities for much of the year is now facing scrutiny, with even market leaders showing fatigue. Simultaneously, hyperscalers like Meta and Alphabet are tapping the debt markets for massive data center expansions, echoing late 90s dot-com strategies, but with stronger balance sheets today. However, analysts warn that trading cash for credit isn't always good news for bondholders. Wrapping up with retail investor trends and portfolio implications, appetite for gold and Bitcoin is waning after sharp rallies, with new JP Morgan data showing retail buying plateauing in both assets. Meanwhile, meme stocks are still generating serious buzz. Reddit, Nvidia, and Beyond Meat among the most hyped, but these names remain risky as volatility rises. Quick recap before we go. S&P 500 lost nearly 1%, the Dow closed down about 0.5%, and the Nasdaq was off close to 2%. The major themes: tech sector volatility, retail investors getting more cautious, crypto weakness pressuring risk assets, and shifting leadership within S&P names. Looking ahead, watch for any signs of stabilization in tech names, upcoming economic data releases, and how policymakers respond to market swings. Don't forget, subscribe and follow us for your essential daily market rundown. Thanks for tuning in.